Today's trading in the Dow showed that it didn't do very much of anything. It maintained its level above the 200, but in an indecisive manner and traded just below the T line. The Nasdaq, on the other hand, after coming back up above the T line on Friday, continued to trade above the T line, which puts our very simple analysis into effect that as long as the index continues to trade above the T line, it's got to be assumed that we're in an uptrend. And what was more compelling was seeing that the transportation index, after coming back up above the T line on Friday as a hammer type signal, was up 127 points today. So even though the Dow was off and the Nasdaq was slightly positive, the S&P 500 slightly positive, the transportation index being up over 100 points was good evidence that they weren't bailing out of this market, or there wasn't any major bearish sentiment taking control of the market. This puts the candlestick investor in a position where if they can identify a strong price move or reversal signal, like we saw in Effie T, one of our recommendations today, that you had a kicker type signal, which was relevant because the kicker signal itself is one of the strongest candlestick reversal signals. And on top of that, you can see we had a fry pan bottom that was breaking out right here at the 50-day moving average and broke out Friday above this level. This identification told us that there was a brand new strength in this chart as well as a breakout, allowing us to have a good percentage return today by buying on positive trading. SE was also recommended because of a very simple candlestick signal. There's our morning star signal in an uptrend that pretty much revealed that the the T line was acting as a support level that you could be buying on positive trading, also indicating this uptrend was going to remain above the T line. This is not rocket science. This is merely identifying what investor sentiment does, especially at a natural support and resistance level like the T line. Knowing what to expect allows the investor to be prepared for the next positive trade. For example, blue also did a morning star signal right here on the T line, making this very simple. That if the market's open positive tomorrow or relatively flat and blue is opening positive, you've probably got a good prospect of a positive trade setup that would allow you to identify where your next price move would be, probably the top of the trend channel, which would also correlate with coming back up to the 200-day moving average. The same scenario could be applied to ALGN. Notice the pullback once it had two huge moves to the upside. There's your bullish left-right combo, which in itself is a strong bullish signal. The fact that they pulled back indecisively was a clear indication that the bulls were, even though they weren't present, the bears didn't have a lot of pressure knocking it down. And once we got back to our support level, the T line, we could see the buyers were stepping in. This also makes for a high probability trade setup that if they open this positive tomorrow, forming a potential doji sandwich, which could mean that you're going to break out through this level, making the 200-day moving average your next likely target. Will that be the target? We don't know, but at least we know that if it started moving up, that would be what everybody else is watching, and we have a much better view based upon each daily candlestick signal to tell us whether the bulls are continuing to maintain their control. These type of setups are what we're going to be teaching on the weekend of March 2nd, where we show people the high probability, what we call top rank signals and patterns that dramatically improve your probabilities of being in the right place at the right time. That'll be it. We'll see you in the chat rooms.